All right, welcome back, everyone. It is my Tuesday talk with the one and only Brannon Potts of Building Wealth Flow. So, how's it been, man?
Man, it's been good. We've actually here in Dallas, Fort Worth, we've been socked in the house full of ice. I went outside this morning and the best description, it was so solid ice. It was like an ice rink. I had to really just scoot just to get to my car to get something out of it. It's nobody's moving. I haven't seen a car in 2 days in our subdivision.
Yeah, I have no idea what you're talking about out
I
here in
know.
Hawaii. But you did go to Bucky's, you said, right? You
Hey,
ever?
I've got my Bucky's coffee mug here.
All right, cool, man. So I love talking to you on Tuesdays. You always bring a different perspective on things. I think today you kind of want to dig into kind of the five maybe pillars or five steps of ownership, right? Or
5 lever levels of ownership. This was from another video I watched, and then I added a lot of my thinking on it, and I thought it would be a very good discussion. And really, it's a discussion on leverage and how you move up those levels utilizing leverage.
All right, sorry, I was connecting to
That's right.
Instagram. So, yeah, so maybe kick us off, or where did this come from? I guess the thought process, where you're thinking about it for a while, or
I have actually, this is part of some of the notes from my book, but then saw a video that just sparked a lot of creativity of writing this up and thought this would be a good, just a good discussion with our group and understanding how people are getting ahead today is utilizing leverage. And inside of the levels of ownership, it all fits together. So that's what we're going to be talking about.
all right, very cool. So I know there was a video also on Alux, and that's
Yes.
kind of where I looked into, was getting some perspective on it. Is that kind of what piqued your interest on it too,
That
or?
highlighted a piece of it, but I've had some notes, and then I'm created more notes for this. I mean, this is going to be more of a high level discussion because we want to get it all in this hour. But I think it'll open up a lot of thought and maybe some questions. So going to financial literacy, this all ties together. There's 6 key words to financial literacy, and that is profit, or just say income and expenses. Then you have assets and liabilities, and that final one is cash flow. A lot of this comes from the Kiyosaki group and all of their writings, but those are the key words to understanding financial literacy. And I think even in these levels, as you're moving up levels, you're starting out at the first one is just focusing on income, and that's the first. And then you move up the rungs, you're also learning all those 6 words, all those meanings to that, and utilizing leverage at the highest levels at level 5. So that's kind of what we're talking about. So let me kind of get a little bit in it. Level 1, this is different than the video, and it's you're in a position, and the first level of ownership is the job owns you. A little bit different. The job owns you. That's the first level, and let's just say we all start there. This is where we all start in our lives, where in a way the job owns you. It's, you show up, you get paid. You don't, you don't. You don't get paid, and you're selling your life, like Dion says, you're selling your life 1 hour at a time, even down to, even if you invent something in the system that you're working for that company that they didn't have, do you own that system or that invention? You don't. The company owns it because you invented it while employed with that company. They own you. And this is a person that this is where we all start. And when you start out, you have little leverage, but there's a spectrum even inside of that level 1 where you're learning leverage. I think one person with very minimal leverage you're probably capping out around $120,000. Just there's only so much you can do without leverage. And when I'm talking leverage, I'm talking it can be systems, it can be computers, technology, it can be having an assistant that's helping you. These are all pieces that you're beginning to understand the principles of leverage so that you're not capped out. If you didn't have some of those tools, I say one person with their hands is probably capped out at about $120,000 in income because there's a finite amount of things one person can do and the amount of hours in a day you can work. So there is a ceiling if you don't use pieces of leverage. What's your thoughts, Mark?
No, interesting. Yeah, I think that that's kind of where most of us struggle with, right? I mean, for a lot of people, 120K is sufficient for their lifestyle. And I think we go back to, even I think a lot of people, it was mentioned in yesterday's live stream, about the Zuber and Ryan Pineda video. People were kind of, um, maybe they didn't realize how much Zuber was making at the time.
I saw those comments. Yeah, there was a lot of people, but he was using leverage. He couldn't have done that with himself. I bet you he would admit he had pieces of leverage. You can have it as an employee that raises that ceiling. And that's what I'm trying to talk about. I hope this is eye-opening to people. I began to realize it. And let me just talk specifically of me giving a specific example. So when I started my real estate career, I did not have an assistant. And I realized there was only so many things, so many sales I could get done in a year in my area. And that ceiling was right around that number. I couldn't get above that number without adding other pieces of leverage. I began by adding some systems. I had my wife help me. We started documenting the systems. I can then produce work that much faster. Then, of course, I'm using technology. We're all using our computers and technology. But you can say a person working with their hands, there's a ceiling. So how do you increase that ceiling? Is you're learning the components of leverage, and it's more than one thing. It's systems, it's technology, it's other people that are helping you. If you've got other people that are helping me as a salesperson, I got an assistant that would help with the paperwork. That wasn't what I was naturally gifted at. Well, then my revenue went up because I took those finite hours. If I'm spending, let's just say, half the time doing paperwork, and that's probably about right, and the other half was sales, which is the most profitable work? It's the sales. So then I add that assistant, and now my income goes up. Also, I have added a cost. Now I have this assistant, so that then the additional revenue should cover that assistant and add revenue to myself. So then I think that cap goes up. And I'm coming up with a number, not saying this is, finite, definitive, but I think the concept, I hope everybody's understanding, there is a limit to what you can make by yourself. You have to go in forms of leverage to begin raising income, whatever position you're at. You also can raise your income in, this is level one. So I'm going to get through all the 5 levels. You can raise your income by increasing your skills. You can increase your education, get more efficient, get better at what you're doing. You become, get into mastery with that. So that's kind of where you are as an employee. And I know Zuber talked about his. I bet you he had pieces of leverage. It was not only just the works of his hand. There was other people helping him make that, helping him to get to that type of revenue. There are different caps of different positions of type of job that it can be $1 million depending on the leverage that are used, even though they're an employee.
Yeah, absolutely. I want to make sure we hit all the topics. So I don't want to spend too, because it seems like we could probably spend the whole time on
Yeah,
this.
that's why I want
First,
to say I want to get through this.
I do want to say I think AI is going to also help with leverage,
There's
like you're
another
saying
feature of
AI.
leverage.
And I do want to touch on. I know there's a question here from I don't know if you want to address it real quickly. Your thoughts. Life Unruled it says speaking of leverage, is the whole life insurance concept mentioned in the book Retire in 10 Years or Less legitimate? I like the contents of the book, but the sales funnel makes me skeptical. So I have my thoughts, and you want to address it real quick?
Yeah, I know that he talks about the vault and he is using whole life insurance and overfunding the whole life insurance. I'm not saying I know enough to say definitively yes or no. I'm still in discovery mode. I'm leaning towards that's probably not going to be a fit for me. I have others that Brian Waters that was on our video a couple of weeks ago. He is doing it, and he's coming to the convention, our family reunion. I'm going to talk to him more about it because I have some lots of questions on the cost of whole life. That's a cost I don't need. So is it really worth it to overfund it and get this tax-free income growth when I'm still having to buy something I don't need? It's a concept of infinite banking. I just don't know. So understand that, and I appreciate the question. I'm not certain on that. Maybe it is. Right now, I'm leaning it's probably not a fit for me, but that's where I'm at.
On that point, Brian will also be back streaming with me on Friday with Justin Cambra. For me, I do know a lot of people that do use the whole life insurance concept, and to Brannon's point, the way I look at it, it's more of a towards the end game phase when you have a lot of
It
extra
could be.
cash
Yeah.
flow coming in, and it's just another place to funnel your money to park it instead of just a traditional savings account. So your money kind of grows in two places where even if you borrow against it, the whole policy is still growing. The only issue typically is if you don't work with the right people, there's a lot of fees up front. So you have to find the right agent that knows how to design the policy to where you're keeping the fees to the minimum. And it typically, there's probably like a 5 to 7 year break even. So you have to fund the policy. You're going to overfund it, but it takes a certain amount of time to get the cash flow and where you can borrow as a break even point. So after that, then it's not really you're spending too much fees on it from a funding it policy. It's just a monthly payment. But it to get that break even number, it takes about probably 5 years or so. And but it's usually the high fees that keep people away from it.
And that's why I don't know enough. I need to get all the details, and I've got the three different providers. There's specific providers for this whole life product to where it works. I'm not, I'm open. I'm still learning. We're all on a journey. And that's why I'm not definitively saying no, I don't even want to hear about it. I want to understand it so that I can, if I am saying no, I've got specific reasons of no for me. It might be right for somebody. And that's kind of what you're saying, Mark. I just don't know. I don't know enough. And I'm in the discovery mode right now.
Yeah, it's just another tool. And to Hyder's point, you're just leveraging the life insurance.
Yes.
So you're basically, if you were to borrow off of it, you're basically borrowing off the death benefits. So
Right.
so if you don't ever repay it back, just the death benefits becomes lower now. And then, but the one thing people like about it is probably the easiest loan that you'll ever get. So once you get the policy funded, you don't have to take any bank doc or go to a bank. You can just borrow from yourself, borrow from the policy. You don't have to take W-2s. You don't need to take income statements. You don't need to, it's just basically you have your own funds here where you can borrow. So if you're like retired and you don't have a W-2 where it might be harder to get a loan, it's easy to borrow off of.
It
Um,
is. But I think, from my background, I have term insurance, and really the ultimate reason to need insurance, life insurance, is to replace income. That is the purpose of life insurance. I don't need life insurance now. I have enough passive income and business income, whether I was here or I passed away. That income doesn't change. That's where I'm at. So I don't need life insurance. So it's a product I flat out do not need. And so that's what I'm thinking about it. But the juice has got to be worth the squeeze. I just got to get the information to see if it's the right fit for me. So
Yeah.
let's get back to the levels, I think. But that's a good question.
Yeah. All right. Yeah. Well, let's move on. What was the number two, I guess, or
So let me
next?
let
Or
me summarize level 1. So I have this, and I use this as a prop. So this is from the cash flow quadrant. So uh, the gain cash flow. So you're preparing this financial statement. In level 1, what is the focus? The focus is right here on income. This is where the employee lives, is right here. This is level 1. This is the basic understanding. They're focused on growing their income. They are beginning to learn pieces of leverage to continue to grow their income. Level 2, I will say level 2 can be skipped. This group proves it. This school group and all of the videos and all the people you and I have been talking to, there are a lot of people in level 1. Michael Zuber was level 1 and he skipped level 2. He went to level 3, and we'll get to it. So you can skip because he was living beneath his means, took that money and started using leverage through other people's money with hard assets. So level 2, you own, this is the one. Level 2, you own a business, and I put level 2A and level 2B. This is sorry, self-employed. Well, level 1 is the highest tax rate and the lowest income and wealth growth. You have to move up in levels to lower your tax rate and to increase your income and wealth. So level 2, I would call it the second highest tax rate, level 2A. So the first level is the job owns you. Level 2A is you own a job. This is where you've started like a self-employed person. They're like a specialist operator. It's really not a whole lot different than level 1. It's a person that says, I can do this better. You are you're getting more autonomy, but you're getting more liability. You have some upside of revenue, but you definitely have a lot more liability because immediately, what changes? If you don't work, you don't get paid. That is still the same in a self-employed person, that specialist person. But you carry more liability, and your tax rate, you're paying self-employment tax. But you have choices because you can choose your pricing, the times you want to work, the product, the equipment, and the help. This is where you start moving up. So that, like I said, even level 2, it's a continuum. There's a bottom level 2, and then you move up. So with this, you can begin to hire people. But what I've seen a lot of specialist people that are self-employed, they struggle with that because they say, well, that person can't do it as good as I can. And so they get kind of caught in this cul-de-sac and they can't get past it because they're still limited. Like a level 1, the only way you can add leverage is add another person. And what I was learning to get past, I had developed the systems and I understood they couldn't do it the way I wanted it done exactly. But I learned to overcome that and say I can manage them and give them the training. Sorry, my allergies are bad today. But you can train them and they can do it as close as possible. That is the way to increase my revenue. They're not going to do it exactly the way I do it, but I can teach them to do it very close. And that's where my income begins growing. Now I'm learning leverage with people at a higher level. Level 1, if you have an assistant, you're beginning to learn that leverage with people, but the company still owns it. Here, now you begin owning it and you're learning leverage with people with what you own. What's thoughts?
well, first, is your allergies kick up around me? Is that what's going on, or?
I don't know. It's tough this morning.
Um, no, I totally agree. And even like Josh Burdick comments, he says, as a biz owner, I'm also responsible for my employees' income. And I know I see Chris Webb tuning in, and they, he had a cookie business, cookie store when he was in Colorado. But I think, to your point, that is the most difficult part for people that decide to start a business or want to have a business, is that, and a lot of them don't ever transition to that point, like you're talking about, right? Do you think that it's something that can be taught, or it's just something at some point, the
I
light
do
switch?
believe it
Yeah.
can be taught to some. Some will refuse to do it. They want to do it themselves and they can't get past that person's not going to do it as good as they are. And they'll be stuck. That they've made a choice, they've limited their growth of income.
Yeah.
That's I would say, level 2A is that specialist person, that self-employed person. Because if the revenue slows down, who does it immediately affect? It affects them. They are the immediate effect because it's their income. On a company, there is possibly a delay. Level one, that company's revenue could go down, but your income doesn't go immediately down. But if that income continued to go down in that company, you're going to be affected. With level 2A, you're immediately affected. So you're still learning leverage. Level 2B is now you're somebody that's becoming a business owner. Because level 2A, if you're not working, the revenue's not there as a specialist. Level 2B, now you've begun using people leverage at a higher level and you're able to get away from the business and the revenue still goes on and it still happens. You no longer have to be present in the business. That's when you have a real business. If you have to be present every day, every hour, or the revenue doesn't come in, you don't have a business, you own a job. Level 2B, you begin to own a business when you don't have to be there. And the test that I've always used is if I could be gone for a month and the income stays the same or increases, that's when I know I own a business. If I have to be there at all times to make sure the employees are working and that the revenue is doing well, if I have to be there, all I own is a job. I own a job. I'm now paying for that job. But if I can walk away and be gone, let's just say for the month, that's the test. If I can do that and the revenues are the same or increasing, I now have begun to own a business. That's the next leverage piece, is learning how to leverage good people. And and he's right. You're responsible for the whole thing. You're responsible overall for the big picture. And I used to tell the employees, what, Mark, you have something.
Well, yeah, I kind of want to touch on two things quickly on this. So the first one I would say is, now let's say, I think a lot of it, it always comes down to everyone understanding themselves, right? So let's say you are an individual that does have a difficult time not delegating, I should say, but giving up the responsibility, right? Would you say that person is just better off not trying to start a business? I mean, just your quick thoughts on
If
that.
you can't delegate, you'll never own a business. You'll own a job. You have to learn to delegate to the right people. And you're also learning the power of how you hire. You're learning to understand how to get the right people. And the other thing I used to tell the employees, and I learned this over time. This wasn't just an instant. I read a lot of books and learned from a lot of mistakes. I would tell the employees, here's the standard. This is the standard we follow. If you don't want to participate, you can self-discover your way out. But this is the standard. I would hold them to a high standard. And I'd say, I don't want you to make mistakes. But if you make mistakes, it might harm the company a little bit and harm you financially. But I'm watching what the choices are being made. I have learned, and why, you know, some people would get frustrated. I would take a little bit of time before I'd make decisions. And I tell them, hey, if I have done this, I have made mistakes at this higher level, and it can cost lots of people their jobs. That's why I'm slower in thinking through that decision and playing it out. What would happen if I made a decision? So your decision making has more responsibilities. the higher level you move up, because it not just affects you, it affects other employees, other families. And that's why I would break it down. Each one of these employees represents a family. If I made really bad decisions, I could be costing lots of families. I took that responsibility very heavily. And some people would get frustrated because I wouldn't knee jerk make quick decisions, because I'd learned that mistake and it cost people money, not just me. And so I understood that responsibility.
I do see Cody Davis tuning in from your channel. He also, I believe, what that stands for, BTRFL. I believe is build to rent for life.
There
What
you
I'm thinking.
go.
I see Gus here. So me and Gus did a live stream on Sunday, so go check that one out. The last thing I want to add to maybe this point of your discussion is, now I want to flip this towards the real estate side of property management and self-management, right? So you do have a property
And I
management
moved that's
business.
in these levels. So yeah.
Okay. Well, we'll dig into it then when you
No,
bring that up.
ask the question because I want to make sure I fully address it.
Well, I mean, it's kind of to the point of delegating duties, or do you think everyone should be trying to self-manage? And do you believe in that kind of idea of how, some folks think that the property manager is making more money than the owner in a sense, right? So what's your thoughts on that? Should everyone be striving to self-manage their properties?
I would say if you want to grow to a higher level, you'll reach a point where you can't grow any further. It could be 5 doors, it could be 20 doors, it could be 100 doors. But if you're self managing, you own a job. No matter if it's real estate or not, you own a job. You don't have a business yet. If you're having to do the work, you own a job, even with real estate. And so I go to a different level, and we'll talk about these things. At some point, if you want to continue to grow, you're going to have somebody else manage them. Then you can continue to grow. Or if you want to make it more passive, you're going to have somebody manage them. And I went through this path. I just started from day one. I don't manage my properties. I have a manager manage my properties. So for me, I will every now and then get involved, not because I have to, just because I want to. I really just choose, hey, I want to go see kind of the pulse of the tenant, and I might show my property a couple of times just strictly because I enjoy it. But then other times, most of the time, it's my property managers or the maintenance coordinator. They're handling all of it. It's, to me, all I'm doing is managing the big picture. I don't want to own the job. I'm maybe a little bit more open to delegating. I don't have to do everything. I realize the power of leverage with people, that I can continue to grow my revenue by leveraging delegation. So with that, so 2B, you own now. 2A is you own a job, you're doing the work. 2B, now you own a business. That's level 2B. Level 3, and there's people that can move from level 1 to level 3. They can skip the business piece of it. And there's a lot in our group that skip that business piece from that side. But at some point, if you want to make it truly passive, you've got to take principles of level 2B, of delegating to a property manager if you want to make it more passive, to where you don't own a job. Having the real estate yourself, and there's nothing wrong with that, but I'm just saying, moving up to where it becomes more passive, you got to begin owning a business. And that business can be the real estate you own. That's what I teach in here too. Understand, owning these real estate properties, you are owning a business. Either you own it as a job or you own it as a business. And you've got to be thinking business wise. Cody mentioned it yesterday. He looks at the gross revenue, he looks at the expenses and says, okay, I want my NOI to be, let's just say 70%. And then I want my cost of capital to be less so that he can have 50% net net. He is thinking like a business person. He's talking the language of business. That's what you've got to think when as you're continuing to grow your portfolio, is begin to learn it like a business. And that, I was loving that discussion. So level 3 is now you own a single building. This is the next level, and this is you becoming a lower tax rate. You own the structure, the property needed for somebody to live or operate. It could be a commercial building, it could be a residential building. Now you own the hard asset. That's moving up in ownership, level 3. Now you've switched from your let's just take the other levels. Level 1, your taxes are taken out first and then you receive the revenue. Now you're moving the numbers, and now you receive the revenue. Well, let's take it out. Your taxes come first, then you receive your revenue, then you receive your expenses, and you get what's left over. That's level 1. Level 3, now you get your revenue up front. You subtract all your expenses, then you pay taxes. And some of those expenses are non-cash events like depreciation. So you're learning a new level of ownership and rearranging the numbers of where the revenue comes in. As an employee, your net, what you have left over comes last, and everything else is taken out first. Here you've moved it to where your taxes are taken out last, basically. This is still, and this is what you were talking about, this is still active property management. You're still using pieces of leverage. Now you've learned leverage with financing activities. Before, in level 2A and 2B, you're learning leverage with operating activities, with people and operations. Now you're moving into level 3, you're learning leverage with financing activities, but you're still active management. You own the job. You own the hard asset, but you now own a job of actively managing it. Does that kind of address what you're talking about?
Yeah, I think just, a lot of people in the community, they struggle with the idea because it's been presented to them that the property manager is making way more money than them, right? So I think a lot of people in the community are always feeling as if they should be trying to self-manage their properties, right? Because um, they've kind of been sold the idea that the property manager is making more money than them. So I've always looked at it more your way, where I'd rather be as hands off as possible, like running it as like a business. And if it comes like, even looking at it as like you're saying, like a line item expense, right? So let's say
Yes.
if you are going to have property management, this is the line item expense. So maybe I do need two more properties to account for this line item expense, right? So I look at it that way, where I ultimately don't want to do any self-managing. The only reason I'm doing somewhat self-managing now is to see if it's possible, and if I ever was put in that situation where there was a transition period and maybe I didn't like my property management company and I needed to self-manage. So I just want to make sure the systems are in place. But ultimately, yeah, I don't want to do any self-managing if possible. So that's my end goal.
And I think Brady just said, and this is from the E Myth books, are you working in the business or on the business? If you're doing the day to day, you're working in the business, not on the business. And you look at Coach Carson, you look at Zuber, where I've done it, I began because I learned the power of leverage with others so that I could work on the business. Same thing with me doing these builds. I'm not hammering the nails in. I'm not hiring the contractors. My GC is doing it all so that I can work on the business and be looking out ahead, that 30,000-foot view, and buying the next property. My GC's making 15, 20,000, and I'm making over 60. Which is the better return on my effort? It's not trying to save every little nickel and I'll run out of time. Same thing with properties. A lot of people, and I understand it, the first few you might be managing them yourself because you're trying to optimize that cash you need for the next properties. But at some point, you're going to run out of time and effort, and you can't get more properties, or you can't have time to evaluate new properties because you're so busy in the weeds doing the day to day. I just I grew up in a family of business owners, and these were some of the things that were taught to me. I'm trying to teach them in video, and understanding people to understand the power of leverage is multifaceted. And so that level 3 is more of a financing leverage, and you can move from level 1 to level 3. But to move in these upper levels, you have to have learned pieces from level 2 of managing a business and learning how to delegate so that you can handle more. And the question I always ask, and ask yourself, which would you rather have? 100% of a grape or 10% of a watermelon? Which is it? I'm okay with giving up some of my revenue. I might make less on an individual basis, but because I handle and have so much more, my income goes up. And I'd rather take the 10% of a watermelon, not the
Uh,
100% of the grape.
Before you move on, Lynn does make a great point. She does say, agreed. I already exchanged my time for money at my W-2. I am buying my time back by paying a percentage to my property manager.
Yeah, that's very good. That's very good. So that's the basics to level 3. So now the focus begins. It's the beginning stages of not just thinking, let's just take this chart. Let's see if I can get it where I can get it. You're here and here.
Just cover your face. It doesn't
I
matter.
know these two. It's income is employees. If they're only thinking income, they're thinking like an employee. You become, when you're self-employed and have a small business, you're thinking income and expenses. This is the 6 words of financial literacy. You're moving there. That's where you're at in the first couple of levels, and you're starting to move up higher. The next levels, now you're thinking balance sheet. Level 3, you're beginning to understand balance sheet of owning assets that produce cash flow. So now you've moved your thinking not just to income and expenses. You've learned how to hold those accountable in excess cash flow. Now you're understanding I need to own assets. So you're moving in level 3, you're moving into the balance sheet and understanding owning assets. That's level 3.
I do want to bring up. I think I put his Jim, the grumpy contractor who just started a new Sunday call-in school. The contractor call. It's a great one. People can bring probably inspection reports, get ideas on burrs and things like that. But he also has his YouTube channel. He just kicked off, so I'll put that in the chat. But he does bring up a great point. He's coming in from your channel. He says, I'm finding trying to save those pennies, small dollars, is costing me thousands trying to work through it all and get that system in place. So I'm not doing that anymore. Yep.
Yeah, I've watched, husbands and wives have different perspectives. My wife, she's great with the money she has, and she really focuses on saving the pennies, and I am very glad for that. I tend to be more big picture, and I'll see opportunities to where, okay, I'm not going to focus on these pennies because I'm able to save hundreds and thousands by doing these actions. And if I would have spent so much time focusing on the pennies, the return on my effort wasn't there. So I'm seeing, the hundreds and thousands as the examples of where I can save. Why I hire a GC. My GC's making 15 grand, but I'm making 60. I'm not having to do that. I'm not focused, if you want to call that pennies, but that's an illustration I have in my life of why I'm not the GC. Yes, I could be, and maybe I'd save an additional 15 grand, but then I'm down working 400 hours on each build when I'm only working about 30, 40 hours per project, and I'm making 60,000. What's the best return on my hours?
Yep. All right. What's the next one we got?
So level 4, and there's many in this group that are here. Now you begin to own a portfolio. Now you're owning a bigger real estate ownership. You're owning multiple properties. You're moving from owning one is very unstable income. The moment you have vacancy, your revenue is zero. And you're saying, hey, I can't stay here. That's the beginning stages of the real estate. So I can't stay here at level 3 because only one has a lot more unstable, but you're starting to see what it does to your balance sheet. You're saying, hey, maybe there's something good to this. So then you move up to level 4 and you're beginning to own multiple properties and you're spreading that risk and that inconsistency out, and you're finding out, okay, now I own multiple properties. I can have one vacant, but I've got all these others that are still have tenants in them. It's evening out the revenue. You're also beginning to move from being an operator to more of the bigger picture, because now you're saying, hey, I need to start focusing not on each individual property. I need to focus on acquisitions of growing my portfolio. It is moving up the power of leverage and saying, I can't do every single thing day to day. I've got to delegate some of it and systematize or delegate some of it so that I can own more portfolio, and your focus becomes bigger picture. You're becoming a professional operator. Thoughts on that?
No, I was just gonna add in Jim is going to the dark side, he said. But Yasik would be very proud of him. Jim says, I'm finding myself leaning towards moving to the dark side and getting property managers for certain properties because my value is definitely in the project management side.
He's figuring out where his best return is. Yep.
Yep.
And you're learning. So this is level 4. You're moving now. You started out with income, basic understanding of income in financial literacy, moved up into expenses, learning income and expenses, living beneath your means. So you're moving up in your financial literacy understanding. Level 3, you begin to touch into the balance sheet. You're owning your first hard asset. Now, level 4, you're getting at the higher levels of financial literacy. That is the finals of statement of cash flow and understanding cash flow from operating activities and from financing activities. You've become a professional operator and you learn that flow of money, how it affects you, not only just your income, but your assets and liabilities. And some don't even get past level 4. This is where I've seen people crash. And these are some of the stories I learned in banking and what I observed. They had multiple portfolio, but they didn't fully understand the financial literacy, and they got the wrong type of loan on the asset. They do use short-term financing for a long-term asset, and they got caught out. And then that asset and that pricing on the loan on the capital got repriced because they didn't fully have the financial literacy. They lost their entire portfolio. They didn't understand you've got to have the operating activity right and the financing activity right. That's parts of the statement of cash flow. Yeah, Cody discussed this a couple of weeks ago. He was learning the true meaning of cash flow, and that inside the statement of cash flow, there's subsections to it. Of You've got to have the operating activity creating positive cash flow and the financing activity creating positive cash flow. This is deeper levels of understanding of finances. This is high level moving up inside of level 4.
From your channel, Izzy Glaze 5871 says, this is gold. Thanks, guys. I see the smaller real estate investor business self-managing and struggling. They never scale. They never
Yep.
seem happy because they have a full-time job. And just kind of to Josh and Trisha's point, they're gonna kind of split the difference, and they're gonna try Hemling, where they can kind of change between tiers.
That's the in
You know,
between
yeah.
differences. They're transitioning. Hopefully, they're transitioning.
Yep.
Yep. So this is that level 4. Most people only get at the basic level of level 4. They can't move further until they understand leverage at a higher and higher level and understanding cash flow, the statement of cash flow at a higher and higher level. So that's level 4 is now you own a portfolio. Level 5 is the pinnacle. The best descriptor is now you own the ownership of businesses and the real estate. You don't do any active management. You own all the levels. And think of Warren Buffett. When he buys businesses, he stacks them in a horizontal business model where businesses complement and work with each other. And his returns with leverage and scale gets even better. He's using all kinds of businesses that work off each other to create an even stronger business. So from level 4, they've got a bunch of revenue from a portfolio. Now they're moving. This is high level. I was trying to think of somebody that maybe is an illustration. Maybe it's Grant Cardone. This is super high level people. BlackRock, possibly Blackstone, where they own all the companies that manage their portfolio, and all they do is manage the managers of their portfolio. This is super high level, but they had to have gone through all these levels of learning how to have a business, learning how to have a portfolio, to creating a stacked business where it becomes so passive. All you're doing is holding accountable the people that are managing your portfolio. It could be a property manager. That's a segment and a move up into heading towards that level 5, where you're beginning to have a property management company manage your portfolio so that you hold them to targets. It could be, leasing targets. It could be lots of different things, managing the repairs. You're holding them accountable to operating the portfolio. That's the highest level where you're managing a business. The example I have, is I own the property management company. I don't operate the property management company. I hired people to operate it. I have my portfolio inside of that company, letting them operate it. I'm just holding them accountable, which allows me to hit targets and to continue to grow the portfolio. But I'm also making money off of managing all those different properties that are not mine, and learning the information. Because I've gone vertical, I'm learning the pulse of what's going in Dallas Fort Worth with tenants. I'm learning what works as an operator and what doesn't. I'm stacking the knowledge inside of multiple businesses. So my portfolio is a business, and my property management company is a business, and I'm putting them inside each other.
Hyder does say the best CEO started as the janitor. But I do have a
You're right.
great question here. I'm going to put you on the spot a little bit. Charles McCune,
Uh-oh.
Mr. Helicopter, has a great question. He says, "What level is Dion's business at?"
Level 4. It's inside of level 4. I would say Zuber's a high level 4. If he were to own something that manages them, a company, that would change. But he's a high level 4 because he has a manager that manages the portfolio, but he doesn't own the company that manages it.
Yep.
But it's not just, I'm just giving the illustrations inside of real estate, but companies have these principles too. And that's why I used Warren Buffett outside of real estate. He owns multiple companies that are all tied together, and that he makes more money because he owns the vertical companies.
Yep. But always going back to maybe Dion and Zuber's point too, right? The entrepreneur or the business owner is not for everyone, right? So I think most people can be,
There's most that aren't.
yeah, can be very successful at the level 4, and that's their ultimate goal, right?
Extremely
Yeah.
successful at a level 4.
My one, let me throw something in there too. So let's say you are at level 4 in for real estate, you're saying like a portfolio, and now you diversified into dividend paying stocks or something like that, would you consider that as going to level 5?
I would call that more back to level 3 where you're owning a specific asset. It's level 3, level 4. I don't know exactly on
Yeah,
that, but I would somewhere in that range.
because I do see a lot of people, it seems like that is almost somewhat of the end phase for their real estate portfolio. A lot of them have real estate and they transition to a lot of that into, dividend paying ETFs or things like that.
Okay, I've got
Yeah.
a thought on that. So, if they were to own the property management company that managed the portfolio, I think the reason they go back to a dividend stock is to make it more passive and less active. But if you own the company that managed your properties, what is that doing? It's extremely passive. You're just collecting the money. And I wonder if that's a feature to that, why they're going back to Coach Carson did it. He's mentioned that. He's gone to owning stocks, and maybe I don't remember if it was dividend stocks. I believe it's part diversification. So I think that's a piece to it. It's diversifying not just into real estate, but I think there might be a feature to that making it more passive. Well, if I own the company that manages my properties where I'm not touching it at all, I can get to the same spot, making it extremely passive, and I own all pieces to it.
Okay, before we get into Charles stirring the pot again, I do want to get some other questions. But Jim does say you can't rush to get to that point. Am I correct in that you have to go through the steps or you can make some huge mistakes?
You're moving up, yes, because you're learning from everyone. I didn't have all this when I was in my 20s or 30s. Heck, I made a lot of mistakes. I was beginning to run companies in my 30s. I began to run the companies even better or different companies in my 40s. And I'm just sharing even my path. I learned and moved up those stages and began to understand leverage multiple ways to I'm not saying I have fully attained it because there's so many people way ahead of me. So take it. I'm not saying that. I've just feel like I've learned a lot about leverage and that it doesn't have to be just from my efforts. I can leverage people and I can leverage financing and make just as much and maybe more with less time. And so you learn these things over and I'm saying you couldn't learn all this in 1 year. This is for me, maybe I'm stupid. It's taken me 3 decades to learn a lot of this. And even fleshing this out on this video today, this is the first time I've ever taught this. I'm trying to flesh out what I feel like I've learned for the last 3 decades and shared what I've observed from others, what I've observed, the mistakes I've made, and finding out where I've been limited in growth and where I can open up instead of being a cul-de-sac. I'm trying to create an interstate highway of revenue.
Uh, Josh Burdick, so you brought up grapes and watermelons, but he said if you're going to use fruit in an analogy, make sure you use coconut so I understand. So like I said, Charles is asking now, and Matt is a level 2 lumberjack.
I no, I don't think that. I because he owns the portfolio. He owns a massive portfolio, but he's talking about leverage because he has people that have worked for him now. So I think the final piece he might consider, he might not have to because he has the income. It's his choice. He has the ability to manage other property management company. He could run one. I can 100% think he can. He is doing it just for his own properties. He's got people that work for him. So he's doing pieces of it. He just doesn't have that. The final piece maybe is managing others and creating revenue off of that. But I think he's got all the systems down.
And I would kind of to Charles's point, but I think lumberjack is one of those that maybe someday he would learn, but I think like he is one of those that probably shouldn't, in a sense, start a business
He
if the
has
goal is to be just owning it, right? Because I think his personality is that he would have to be involved in so many day-to-day operations
certain
that,
people, they just can't,
yeah,
they can't do it. And that's what we're saying is not everybody is a full-fledged business owner. The statistics say it's 10% or less.
yeah, I'm easy not doing work. I'm easily able to let other people do work. But just like this stream, right? I let you come up with the topic and I just sit
Yeah.
here.
But I look
But
at it too is, okay, if I want to make, use the example, this is what I used to teach other real estate agents, but business people is thinking, if I want to make $50 an hour, what type of work does that involve? And you have to think about that. There's lots of work that can make $50 an hour. It can be done with your own hands. But if I want to make $200 an hour, what type of work does that look like? You have to use leverage. If I want to make $500 an hour, say we're working 2,000 hours a year. So that's a way I had to look at it. If I want to raise my income, what are the types of things I need to do? They are different. $50, $25 an hour work is different than $50. $100 an hour work is different than $50. $250 an hour work is different than $100. You've got to know what that type of work looks like. And to move up in revenue, you have to move up in leverage.
Jim is saying the challenge I'm having is the cost of that leverage and delegating. Where do I draw the line? How expensive do I go?
You're holding it accountable. There are times when I started this property management company, I looked at it strictly as an investment play. I knew I had to hire somebody. I did not know property management myself. I didn't know it, but I was willing to hire it, pay that investment, and I knew I could hold it accountable. And if they didn't perform the way I wanted, I can always let them go and hire a different person. But I knew it was an investment of cost. There was going to be an upfront. It ended up being about 3 years of upfront cost before it got to break even, somewhere between that second and third year. So I spent roughly $100,000, let's just say, before it got to break even. I looked at it as an investment into those employees because I had a long-term plan. It's like a buy and hold. Maybe the profit up front, yes, we want to buy it profitable, but it's not huge profit till 10 years down the road. I looked at it as an investment. I made that upfront investment of that 100,000 for a couple of years, and now it's producing several hundreds of thousands of dollars in profit now. But it took several years to get there. So I looked at it just like real estate. The upfront, the reward is not huge. It's reward over time, and that profit gets better over time.
Yeah, I mean, I would probably kind of relate it to, having your child try to walk for the first time, right? At some point, you got to look at the end goal, right? If you just keep helping them, they may never get off the floor on their own and start walking, right? So you kind of got to let them fail.
Yes.
I know it's hard as heck to to watch them fall over and over
But you
and
give them
stumble.
guardrails.
Yeah,
You're not just
yeah.
saying, "Oh, you do whatever." Same thing with employees. I've got guardrails. I'm watching and I've given them the standard. I even tell my employees, if I have to manage you, I don't need you. The moment I begin to manage you, you're giving me your job back. And I tell them that up front in the interview. I'm hiring people that I believe don't have to be managed because I'm not in that role anymore. I'll give you the standard. I'll show you the guidelines of what to do. But if I have to manage you, you're going to be gone very quickly. But it's going to be done on my terms.
I do see Brady Morgan asking, so level five is vertical integration. If I own the construction company that builds my rentals and other contract jobs, is that level five?
That is a piece of level 5. Yeah, absolutely.
And
But
then
if you're
Kate,
having to
oh,
do all the work in that company, then you're still owning a job at the moment. But if you have a GC managing all your contractors and you're just the big picture, that is where you begin to own a business.
Casey, who has a coffee shop in California somewhere, maybe the Bay Area, but his question is, in retail industry, how do you leverage people in order to free yourself up? And I'm gonna give Casey shit because he's only coming to Vegas for like Saturday and Sunday for the Vegas event because he can't leave his coffee shop. So what advice or what would you suggest to him?
So Casey, at this point, I would say you've got to think through your hires. Do you have people? Have you hired the right people? And this is the learning the leverage with people is learning how to hire the right people that don't need to be managed. Do you have uh, a manager of the location, or are you the manager? If you're the manager, unfortunately, you still own a job. Starbucks. The owner of Starbucks does not have to be at every location. They then have regional people, they have district people, and then they have the local manager. With one location, you've got to hire the right manager that you can leave, and the company still operates at a high level. And until you can do that, unfortunately, you still own a job. And I've done this too. So I'm not saying I've learned this too. And it's all about the hiring of the people. You've got to get the right people that you don't have to manage. They self-manage themselves and want to do it at a high level.
Yeah, so I'm gonna just I don't know, maybe a stereotype, but I'm gonna say Casey is the Asian mom or the helicopter parent, right? And it's just it's hard for them to kind of let other people do the work, or it's
Yeah.
always not going to be the way they want to do it. And if you can't give up some of that reign, you're going to be stuck in that position, all the time, right? And I do see a lot of people in this, the community, they're still trying to get over that hump where they're consistently, and maybe some of them do enjoy, doing the hands-on work themselves, but a lot of times is at what extent, right? And a lot of times they'll
It
say,
creates
well,
limits.
yeah, well, a
You
lot of times,
cul-de-sac out and you can't grow past that. Maybe they love that. Maybe they want to handle all that individual, but it has a cost. You
well,
limit your growth.
a lot of times what I hear is they'll say like the person is doing it wrong. But then my response is, are they doing it wrong or just doing it not the way that you want it done, right? So that's where you have to determine, are they still getting the job done? It's just it may not be the way you would do it, but is the job getting completed, right? And I think that's that kind of got to understand that part.
And every now and then, and this does happen, and you've got to be open to it, saying, I don't know everything. Maybe one of my great hires comes up with something great and better than I could have even thought of. That happens. Great hires do that. You want to hire that highway talent, not the cul-de-sac talent. Cul-de-sac talent doesn't go anywhere. So it's all about for Casey. It's about in the hiring. That's where if you can't get away right now, you're caught into that hiring of you're not hiring the ideal right people that you can get away for more than 2 days.
Or so let me throw a wrinkle in that. Let's say, like you're saying, it's comes down to the hire, right? But what if, like you're saying, maybe the owner or whoever's the manager, they're not necessarily standard, but the systems they have in place is so structured to themselves that other people, right, that are getting hired or trying to do the job, like I saying, they're doing it, they're accomplishing it, but it might not be to the way that this person is kind of maybe would like to see it done, right? So do you think that could be also the owner or manager has to be
Nobody's going to ever do it the way you do it. You're the owner. You have all kinds of unique ideas. That's why you built a business. You have a skill set, but you've got to release some of that and knowing they're never going to do it at 100% the way you do it. But you've got to try to hire somebody I'm just using percentage, that maybe does 85, 95% of exactly the way you would do it. And maybe you create the compensation structures for those type of hires differently than the person that does it at 60%. And maybe somebody does it at 50%. Well, you get rid of them. Yeah, I'm just trying to figure out illustrations to this. You
Yeah.
have to hold them accountable to a standard you're willing to accept.
I forget. What was it? Luke Howard last week that tuned in?
Yes, I don't know if he got on. I did call.
He,
This
he
is
is
strange.
here. He is here. He's coming in from your channel. He says, "Good word."
Luke, I think this is the different Luke. I thought you were my nephew. I called my nephew after the live last week, and it wasn't him. It's just pretty interesting how y'all have the same name, roughly the same age, and that's why I put it together and thinking it was him, but it wasn't.
But Luke, if you do want to connect with Brandon, go hit him up on his channel, message him, and he'll probably connect with you if you had some questions for him. I hope Chris Webb is not here. I'm going to probably give his team a little compliment, the Patriots. But I always relate it to kind of Bill Belichick, the former coach of the Patriots, right? What always set them apart a little bit was he was always able to get the most out of the players. You know, especially in today's NFL with salary cap and whatnot, you cannot always have the best player. You have to spend the money wisely, right? But it just seemed as if he would always maximize different players that other teams gave up on, but it would fit or he would adjust his system to accommodate these players' strengths, right? So he
There
wasn't
he
so.
is. Luke, that is
Oh,
my nephew.
well, I don't know. Maybe he was
Because this
messing.
is your nephew coming in from DBU, where my daughter went to school last semester.
Oh, I don't know then. Well, I don't know what you're doing, but anyways, but I think that that's the thing, right? It's I always think what amazed me about Bill Belichick and when they were winning for so many years was he seemed to always tailor his system to the players he had instead of only trying to get certain players that fit his system, right? And I think, like I hate calling KC out or whatnot, but maybe as the owner or the manager, your systems have to be somewhat flexible to accommodate like you're saying, this generation. I think he said something about them not washing dishes or so like you're saying, this generation maybe is a little bit different or works a little bit differently. Your expectations or systems in place has to be able to work with, like you said, this next generation possibly, right?
You're right. And, you know, great leaders know how to take the components. For one thing, they know how to hire right. And that's what I learned as I was growing my business. I took classes, weeks of classes on how to hire right, how to analyze every interview, and try to bring great people. But then also, great leaders learn how to inspire. Belichick and Jimmy Johnson from the old Cowboys. They learned how to inspire and pull out greatness out of people. That's the great leaders, is learning how to do that too. Is take the components, and maybe you've taken somebody, they just need the inspiration. And with these Gen Z group, what I'm learning with them, they need to understand, they're wanting to understand there's more than just the job, that there's a mission and a purpose to what they're doing, and helping them tie together. Here your effort is, and is how it's meeting this ultimate goal of this greater vision and mission in what you're doing. And then they get inspired. Hey, I am a component. I am a piece of this that's creating something bigger than just me.
Charles brings up a great point. He says, "Have I created enough cash flow to create system that employees can thrive? I was stuck at a 2 because I didn't slow down and think."
Yeah.
Curtis is asking, Mark, how did you switch your mindset from real estate as a side thing to your business? Well, honestly, I wouldn't say it's a business for me. I mean, it's I mean, yeah, you treat it as a business, but it's fairly passive for to my extent. It's yeah, I don't
I'm
know.
looking at it totally, but that's just I've been wired this way now for a couple of decades. I did. I looked at it from a business's from day one. I looked at, okay, I need to grow my revenue. There's the top line revenue. So for every acquisition, let me just say, with these single families, every acquisition represents adding another $25,000 in revenue. So I'm growing that business's revenue $25,000 at a time on these single families. Well, then I've got my basic expenses are about right now at 30%. My bottom line when I'm doing my financing, I'm bottom line right around 20% at the moment for net. So I'm looking at it from business components of the product is the property that's now generating single family the $25,000. I know my cost of goods sold, let's just say it that way, is 30%. So my NOI is 70%. And then my financing activity. I know I'm talking business stuff, but this is y'all are learning how my brain works. I'm looking at arbitrage. I'm saying if this asset produces at 9% for simple math, it produces revenue at 9%. That's the efficiency of the asset. If I can find one at 10%, I'm going to probably go after that. But if I'm going to find one that's producing at 7%, it's not as efficient, that product. Well, I'm finding them at, let's just say 9. My cost of capital is 6. I'm getting a 300 basis point arbitrage of that. I'm running these numbers. I am thinking like a business. That's just how I've been wired. And then I knew I was going to get into this. So I started the property management company even before I had properties because I knew that was my next phase. So I started the property management, got the learning from managing 100+ properties, saying, okay, which direction do I want to go? Well, I love building. I absolutely love building. It's not work to me. I design them on graph paper. I love the process. And I said, well, I'm going to funnel what I love to do from building our own houses, designing them, drawing them out, designing the floor plans. I want to do it in real estate. Well, I want to start property management first. Then I'll get into the properties because I'll know that much more when I start doing my investing activities. That's just me. I know, Mark, you and I are different. Everybody's got a different path. It's not right or wrong. Everybody's got a different path. That's just my path. I do look at it strictly as a business and how can I increase my net. I look at other businesses. If I'm looking at a business that I developed that my net bottom line profits 15% versus another business where my bottom line profit is 35-40% versus real estate, I'm cash flow net at 20, but it makes money more than one way. My bottom line net is well more than 40% on every acquisition of every product I'm putting into that business. That's the most profitable business I have at this moment is my real estate portfolio when I add with all the ways that it's making money. I do look at it as that.
I think just going back to Curtis's question for me, I think it's just more. It was more. So going back to business, it's about income, right? So I think initially real estate as being a side hustle, like Curtis is touching on. For me, it was just like I said, I never thought of myself as a landlord. I had real estate, but it was more just yeah, it was more like it's the traditional. You start with the starter home or condo, and then maybe you work your way to the single family home. And like I touched on before, especially out in Hawaii, you see everyone else, like my parents and their generation. It was buy a home, sit on it for 30 years, pay it off, and now you're a millionaire at the end, right? In 30 years, 30, 40 years from now. But the COVID shutdown really made me realize as far as income is very important, right? Not relying on one stream of income and that sort. So
Right.
that I guess that's where I would say the mindset of shifting from more just owning real estate to actually turning it into a income generating business to some extent. And yes, Chris Webb said he kind of likes how Mark gets the best out of his guests. So yeah, I don't just throw anyone up here. It's definitely I try to pair up people sometimes that I know maybe their personalities will mesh well on the live streams because some people have different strengths and whatnot. So, but Brandon is easy to work with, so that's why a lot of times you'll probably see Brandon on here, just me and him. He's able to bring
I
a lot
write
of
my own curriculum is the best way I describe it. I do write all my stuff and prepare lessons is what I look at. It's trying to teach.
exactly right. So I'm just the owner here. I just let him do all the work, and then I just sit here and read the chat section.
Yeah, he owns me in this venture.
Uh, well, this was a great any final words? I know you mentioned you are going to do a recording with Zuber, so everyone should be on the lookout for that. Do you want to give them a sneak peek on what you guys might be
Yeah,
discussing, or
uh, Zuber and I talked this morning, and we're gonna record tomorrow morning, and just talk about how real estate buy and hold is still working today. This kind of comes from the nature of that video from late last week with Brian Davila saying it doesn't work today, that it can work today. And I know this group was so adamant about that discussion because they're all living it today in today's purchases, that it can work today if you do the work.
yeah, so everyone be on the lookout for that. I will also be streaming tomorrow with my Wacky Wednesday crew of Joel and Lauren. And actually, Emily Lopez will be joining us tomorrow. She won't be able to live stream on Friday, so she's going to hop on tomorrow. But as I mentioned earlier, Friday, Brian Waters from Code 3 Investing, who was on last week with Brandon, will be on Friday with me. And Justin Cameron will also be on the Friday live stream. And yeah, tomorrow we will be discussing also that video that Zuber did. He showed a lot of composure on that interview with Ryan Pineda and Brian Davila. But if you do want your comments addressed, go to that video, put in your comment on the Zuber video with Ryan Pineda, because my recording with Zuber this week will also be digging into a lot of comments specifically from that video. So if you want
I
your
almost put the comment. I actually put it there and deleted it. The only comment I made it in school that Zuber, the Gen Xer, was providing the wisdom to the two millennials who thought they were the smartest guy in the room. I put it on there in that video and then I took it off. I just left it in school.
Yes, so if you want the spicy comments, people have to join school. That's where the no filters are. You
Well,
can
I just think Zuber showed his composure. He really was sharing wisdom, and I felt at times both of them weren't listening. They were just talking past him, and they weren't hearing and really respecting what they could have learned from him. I think he was willing to share more, but they just didn't want to hear it.
Yeah, like I commented in school, I really thought I was going to see Zuber pop out of his shirt and do the Hulk smash on those two. From
But
the Avengers.
I think it showed what kind of class Michael is. That he had composure. I have sent him private messages, not just from this interaction, but from others, where he was getting bashed, maybe not is the right word, but not respected. And he held his composure and really, in my mind, why I'm so passionate about this group and willing to speak and willing to defend is because of what he has demonstrated when he's trying to teach and when he's getting criticized unfairly. He has shown restraint and class that has moved him up in my mind of wisdom and elevated him in my mind.
Yeah, we'll wrap it up with some of the final comments in the chat. Trisha is saying, yes, I agree with Brandon. That was a sad episode. Charles McCune is saying, I really appreciate your work today, Brandon. Brady Morgan says he didn't even watch the episode, to be honest. Well, Brady, I definitely would, at least the first 20 minutes. You'll kind of see what we're talking about, and I'm sure you'll have your take on it. Casey is saying Zuber is super educated and man. Um, and Hyder does say their intentions were probably to make a video, not to learn, in my estimation.
Yeah. Just
All
so
right.
Charles, you know, I mean, I have pages when I write my manuscripts, I've got pages of lesson. And then typically this is the group where I introduce a concept to kind of flesh it out. And then what I'll do is probably create another video for my channel diving a little deeper. So y'all get some of my early material when I'm presenting new material.
And just a reminder, Vegas event is coming up soon. I believe Zuber has about 15 tickets still available for sale. Brannon is speaking at the event. He's also putting together a Friday morning coffee where he's treating everyone, I heard. Uh, no,
Bring your own money.
but he is putting together a Friday coffee meetup. So if you are in Vegas before the event,
Friday
come.
morning at Denny's on the strip by the Venetian. I'll put in school, I'll put the address because I've had somebody else ask. I'll put that in here in the next couple of days and then probably refresh it a couple of times so that they know where we're meeting Friday morning.
And if you are going to be in Vegas ahead of that, the last I heard Dion mention is Wednesday, Thursday is still the Denny's late night meetups. As of now, it's still at Denny's on the strip. They'll probably check the size of the venue once they arrive in Vegas. And if it's not big enough, they think it might be at Bubblegum to accommodate the amount of people. But yeah, stay tuned, everyone. Hopefully, I'll see everyone in Vegas. Brandon, it's always fun catching up with you. We have what, one more? Yeah, we have one, maybe two more, right? No, wait.
Two, I think.
Oh,
Two.
yeah. No,
Something like
one.
that.
I think
Yeah.
I'm flying on Tuesday. That's when
Okay.
I'm hitting. Yeah. All right, everyone. Thanks for tuning in. I'll be back tomorrow, same time. And yeah. All right, all right, everyone. Bye. Oh, hold on, real quick. I see one. What a.m. time, Brannon? Before the
8
wrap it up.
a.m.
8 a.m. Josh. All right, everyone. Have a good rest of the day.